CPI numbers came out on Thursday, and holy cow, what a rally. Let's talk about where we go from here. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our weekly market recap. My name is Chris. I'm with Riz International, and we are a group of traders who are looking to better ourselves, to become better, more proficient traders, and help grow our wealth. And what an amazing week it was, to say the least. Now, there was a lot of anticipation going into this CPI release date on Thursday. We were very hesitant in the market, especially on Tuesday. Look at all of that whipsaw up and down. Let me zoom in on that a little bit. I mean, there is a lot of indecision here. And, Wednesday, it looked like everybody was anticipating the CPI numbers to just be garbage, which is kind of what has happened in the past. But what happened instead? The numbers were bad, but they weren't as bad as we thought they were going to be. So that's good. Not exactly sure how you can follow that logic, but okay, let's go over the numbers. I have them pulled up here. So, okay, here we go. So basically, so U.S. October consumer prices went up 0.4%. The consensus was going to be 0.6, so it was 0.2% less than they thought it was going to be. CPI without food and energy rose 0.3 as opposed to what they thought it was going to be, which was going to be 0.5. So again, about a 0.2% difference between the two. Let's see. U.S. October consumer prices increased 7.7% from a year before. However, the core CPI is up 6.3% over the year. U.S. CPI energy prices plus 1.8%, food prices plus 0.6. I'm not sure where they're getting those numbers because I can promise you food here is a lot more expensive than 0.6% higher than usual. Jobless claims were lower than what they thought they were going to be, so that was good. No, excuse me, they were up. My mistake, I misspoke there. So yes, jobless claims were up, but I will say overall, there is plenty of work to go around. And this is what happens. The market goes absolutely freaking nuts. And this is why we talk to you guys about being careful about only trading with technicals, because if that were the case, we would have thought we would have ran into 39,000 and there would be nothing would be able to bust through it. Well, this is what a catalyst can do for you. This CPI release, the market was up huge pre-market, and we had an absolutely ridiculous day on Thursday. Friday was a bit of continuation, not as strong, but still pretty powerful if you ask me. And then we kind of ran into 4,000. And honestly, guys, this is going to be the technical level for the time being, unless this rally and this euphoria can continue. At that point, I'm looking at the 200 simple moving average, and then, of course, our downtrend line. But those are going to be kind of our technical levels at this point. It may be possible that we see a push through 4,000. That is very possible even this week. It could even happen on Monday if everybody is still happy from over the weekend. There may be more of a buying spree. There may be more shorts covering and more people getting in thinking that, okay, this is it. This is the recovery. Yeah, they might have thought this was the recovery too. So this is why we are being incredibly cautious right now with the trades that we are taking. We are not chasing this rally because, well, traders don't chase. All right, I could use a different word, but YouTube would demonetize us. Speaking of that, actually, I'm not monetized in the first place, but if you are watching this on YouTube and you haven't done so already, make sure you click that like and subscribe button down below. Help us grow the channel and keep reaching more traders to help them learn about what's really going on in the market. So now there are a lot of things that can happen here over the next couple days. Of course, this was the day after the U.S. or the day right after the U.S. midterms. Midterms were on Tuesday, if memory serves. Yes, it was Tuesday. So there was a lot of trepidation after that, and then we got these CPI numbers. They pushed up really higher. Obviously, there's good news coming out of Eastern Europe with the partial liberation of Kherson in Ukraine. If you're following that conflict right now, of course, there are a lot of things that could change in that area here fairly soon as the weather starts to turn cold there in Ukraine and the ground starts to freeze. We're going to be keeping an eye on that, of course. That could be a potential catalyst either direction for the market. So depending on how things transpire over there, could see a direct reflection in the market here. we could have spectacular earnings results. We do have a lot of earnings coming up this week. Let me pull those up for you real quick. I can't make it look beautiful. There we go. So here's the upcoming earnings this week. Some big names reporting. Not too much on Monday. I mean, maybe Tyson. Okay. Tuesday we got some bigger names. We got Walmart. We got Home Depot. We got Advanced Auto Parts. All pretty solid names. Valvoline's reporting. Wednesday before the open, Target, Lowe's. Definitely some big names there. Nvidia after close. That's a big one. We've traded that, and if I'm not mistaken, Riz holds a position. Here on Thursday. Yeah, not seeing anything that's really catching my eye. That's going to be really big. And then Friday, nothing really to talk about either. So definitely, some earnings coming up this week that we're going to be keeping an eye on as well. That could also be another positive catalyst in the market. Of course, there's all this stuff going on in Taiwan as well that has been really hurting the tech sector. We're going to be keeping an eye on that. Basically, what I'm saying right now is there is a lot of uncertainty as to which direction the market will be going this week. I think it is very possible that we breach 4,000. However, if we don't, that will be short-term resistance at this point. We came right up to it on Friday. Looks like we got to 4,148, and then we rejected off of that, and we just hovered right around the close, right around the 4,000 area, or 3950. I saw it kind of hanging around in that area for quite a while on Friday before we closed really close to 4,000. But the fact that we didn't breach over that and close over that kind of tells me that we're going to be holding here unless there's another catalyst. Now, obviously, I talked about this just now. There are a lot of potential catalysts coming up, so we do need to keep an eye on that. Let's see how this broke down in the market for this week. We saw a real big uptick in some of the most beat down sectors, which would be real estate and tech. Of course, tech has been absolutely decimated this year, has typically been on the bottom for most of the year at this point, and really starting to see a bit of an uptick, now only down 24.5% on the year, or excuse me, just 24.15% on the year for all of you purists out there. So, what a run up from, let's see, minus 31, we'll just say, on average. So yeah, tech making a bit of a nice move up. That's definitely, we've been looking for that. Of course, that has been really beat down. Financials getting a bit of a push up. Healthcare and utilities really just kind of hanging out. Not too much move, even with this huge move in the market over the past couple days. Not as big of an uptick as you'd expect. And energy, just a little bit of a dip earlier in the week, and then coming right back up, sitting at plus 62.76% on the year. That is ridiculous to say the least. But the S&P 500 itself still in the negative double digits at this point. The SPY ETF, which represents the S&P 500, still sitting at negative 16.33% so far. We saw some action in the commodities market this week, but not in the ones that we would expect. Honestly, I would expect oil to be making more of a move with this market run up, and we didn't really see it. We've been holding this support level here right around 85.40. That has been holding pretty solid over the last few weeks, and we'll have to see if we can see a push up on there or if we get more of a sell-off. I will say we are in a bit of a short-term downtrend at this point, but again, any of these catalysts that we talk about in the market could see oil go up considerably more or down depending on how things go. What I'm more talking about is this absolutely ridiculous move in gold here. This week, gold absolutely exploded over this downtrend. We've officially come out of the downtrend for gold unless we get back into it. So we're taking that line off, but yeah, absolutely blew through all of these resistance levels and currently sitting right over 1770 an ounce. And part of that is in with the strength of the dollar. The dollar took an absolute beating on Thursday and Friday. Huge rollover in the price of the dollar. So gold is reacting in kind to that. Of course, when your dollar is less valuable, it means you can buy less gold with it. And so gold, naturally is going to go up. Not saying that they're tethered at the hip, but when you're buying in gold, obviously, if you're buying with dollars in gold, it's going to take more dollars to buy the same amount of gold if your value of your dollar is less. But I just wanted to show you this huge rollover in the dollar, massive losses on Thursday and Friday, and that really translated into this huge run up in gold over the last week rather. We really kind of based out here right around 1615 and really bounced off of that very, very well. Bitcoin took an absolute slaughtering as well, and we warned about this 18,000 level, and we have breached it, and we breached it hard. It looked like we were going to hold on, let's see, it looks like Tuesday was when things really started going south. Could have been part and parcel with the election. I'm not going to say that was the only reason, but I do believe there was some news in the crypto sector about some bad news going on with that. But yeah, Bitcoin taking a beating over the last couple of days, looking to try and recover. But look at this, we came right back to 18,000, rejected off of it, and we are still in a downtrend here on crypto. So be very, very careful, guys, with crypto right now. I'm not recommending you take a position. If you believe in crypto long term, this is obviously a great buying opportunity for you. But if you're, kind of on the fence about it, now I'm not recommending getting in. I know Riz doesn't have any positions in crypto, but we do just kind of keep an eye on it. Crypto looking very oversold at the moment. But yeah, Bitcoin really taking a pounding, to say the least. All right, that covers our recap for the market this week. I wanted to go ahead and open it up to questions for all of you here in our live chat. Of course, all of these are our elite members, so I want to give a special thanks to them for being here tonight on the live show. I see some people typing right now. That's spectacular. I didn't get any PMs, but we definitely had. Oh, let me move that. Would we take a look at Google, please? Absolutely. Let's take a look at Google. Google making an absolutely lovely rebound here. I know Riz, if I'm not mistaken, took a bit of a larger chunk of this, and I would be pretty happy if you followed him in on that. Let me take a look here because I'm pretty sure he posted that one. I'm thinking of Microsoft and Amazon, my mistake. But yeah, Google looking really, really strong here and well overdue, if you ask me. Even though earnings were not so hot, they're still making money. And I think that's an important thing to recognize, especially in this market when there's so many crazy companies out there who don't make money at all, make no profit, and are valued considerably higher than a company like Google. Amazing fundamentals, really doing well for itself. And I don't recall Google saying that they were going to be laying people off like Facebook. And, so that's definitely a nice thing. So Google looking very strong here. I really like this. Obviously, it would have been great if you could have gotten in here around like the 87 or something like that. But if not, and you're bag holding this from a previous position, you should be pretty happy with this move. I'm liking it. I would definitely love to see this continue. Now, of course, if we have a negative catalyst in the market and the market dumps, then this will probably go with it. But still, this recovery is looking very, very good. How about a long position if Apple goes below 135? Let's take a look at Apple, the big one. So yeah, Apple, of course, benefiting from this push up. That 135 area looks really nice. Definitely would be okay with that one, Panos, on that. Yeah, if it gets back down there and we see another bounce, if we hold over 135, I could definitely like that. Now, of course, everything going on in Taiwan, guys, is going to be a negative catalyst for Apple. So just be aware of that, of course. Microchips are important. And everything going on in China, of course, is also important as well. So just be careful with this one. Of course, it's mostly going to follow the market. Earnings look to be spectacular. Yep, absolutely decimated earnings. We had the new iPhone come out. I'm not too sure about how the reception has been of that. I don't have one personally. And by that, I mean a new one. I have an older one. Apple looking very nice. If we come back down here and touch 135 again and hold, that would be basically a triple bottom. You can kind of see it here. We came 135, we came back up, we came back down. Sorry, my line's terrible. And then we went back up again. If we come down again here to 135 and hold, you should definitely expect a push higher. Now, of course, all of that depends on market conditions, but I definitely like Apple around 135 if it gets there. Abby wants to take a look at Boyle. All right, so this is a natural gas ETF, if I'm not mistaken. Is this one leveraged? Doesn't look like it. It's not saying so, but all right, natural gas. A lot of things, of course, natural gas is in the news, right? Of course, with the attack on the Nord Stream pipeline, things like that. Of course, the sanctioning of Russian natural gas and oil, things of that nature. That's going to hit Europe pretty bad. I'm surprised that we haven't seen more of a push in natural gas, but yeah, natural gas has been going down quite a bit. looks like we're kind of basing here right around this 32 to 35 area. Seems pretty solid, just from a technical standpoint. From you know the fundamental standpoint, just or talking about commodities in general with natural gas, of course, there's going to be a very high demand of it this winter, especially for Europe. We'll have to see how that pushes on the price, but I would just be careful with this one, especially these ETFs on natural gas. I know that a lot of people like trading natural gas as something to do, but there's definitely a lot of potential downside right now with everything going on, so we'll have to be careful with it. But I do like it around here. If we see a bit of a push higher, I could definitely see this running maybe to right around like 45 or something like that. That could be a fairly safe play. Now, I'm not saying that's going to happen, of course. Looks like we've been getting hammered pretty hard here on this, but definitely a potential one for you for sure. Okay, Panos wants us to take a look at Tesla. Now, of course, there was a lot of news with Tesla and more specifically Elon Musk surrounding the acquisition of Twitter, and all of the snowflakes came out and cried. And he's looking to add the $8 for a blue check mark next to your name. Woohoo, because that matters so much. But okay, whatever. Regardless of whether you like Elon Musk or not, let's look at Tesla here and see what's going on. Tesla getting absolutely wrecked right now. Looks like earnings were pretty solid, missed revenue a bit, but yeah, still a paltry 21.45 billion in revenue. I'm sure that Elon just found the money to buy or Twitter rather in his sofa cushions, making that much revenue. Of course, they do have overhead. I'm joking, of course, but yeah, Tesla, looking to push up. Of course, capitalizing here on Friday's move up. I'm not sure, if this sell-off is really warranted. Now, of course, there's a lot going on with again microchips and things like that. Without those things, and with the price of batteries starting to go up, especially what is it, lithium? The lithium is getting harder and harder to get a hold of. It definitely could negatively affect Tesla at this point, but still, he said that he has a position that's currently break even. He opened it on Friday. I would be okay holding it at this point. If we see more euphoria in the market on Monday and we see a push up, I could definitely see this running a little bit more. Maybe trying to come back. Maybe look at maybe trimming some of your position here around like 223, 222. So that could be a pretty nice, 20-point run up for you on Tesla if we get the market push. If we don't and we see a sell off, or again, we have more negative news coming out of Eastern Europe or Taiwan, or even North Korea at this point with all the missile tests, that could be something that kind of pushes this back down. People start getting scared about, getting into essentially one of the bigger tech companies out there. Not the biggest, of course. Apple holds that title. But still, I like this as a dip buy opportunity. If we continue to see a push in the market, yeah, if you're break even right now, I would be okay holding it. We definitely look very oversold at this point on the RSI. So, yeah, I wouldn't be too scared holding this a little bit longer. I know Riz doesn't care for it. We are in a clear downtrend, but as for a short-term trade, I think it could definitely work for you. I saw somebody else was typing. There we go. Can we go my thoughts on Microsoft? Of course. Now, this one I do know that Riz got in. It looks like we got in on the 8th. So that was a good entry there, to say the least. We got in at 229. So, wow, that thing really spiked on Thursday and Friday's news for the market for sure. Really looking nice at this point. I'm not sure if I would buy it here. If you didn't get in on our alert that we posted, I would not get in now. I would definitely set a profit stop on this. If you're going to let it run, that's totally fine. I get that. We are looking like we're coming up to some resistance here, right around 250. I'll say that'll be a natural, whole dollar amount resistance there just from the number itself. And we've hit that multiple times here. I'm seeing that. Let me draw that for you just so you can see it. I seem to do all my drawing when Riz is here. I don't do it as much when it's just me. Okay, close enough. There we go. So we've got multiple hits. We got like here, there's two. We got some here. We got some here, here, all of those. And that's really what I was seeing earlier. So 250 is going to be a spot for you to really consider taking profits if we can push there so far. Now, looks like we got dividend coming out here, 68 cents dividend on the 16th. So can't beat that. Always good to get free money from Microsoft. Got in at 221. Okay, well, you're looking pretty good, Dylan. If you're in at 221, I'd be pretty happy with that. That's a spectacular entry all the way down here. Man, I would be in this market, I would be taking some profits, bro. If anything, I would set a profit stop at 240. Do not let this thing go red on you. Make sure you take your profits. And that's one thing. Okay, so you got out on Thursday. I don't blame you one bit for that. I would have totally gotten out on Thursday too. With that gap up from you getting in at 221, that's a spectacular trade. I would not jump back in at this point, especially with us starting to run up towards, technical resistance here at 250. Could see a rejection from there. But again, this is a straight chase. If you take this now, if you get back in, it's definitely a chase. I would pat myself on the back and be like, yeah, we totally nailed that entry and exit on Microsoft and be happy with it. Excellent trade, Dylan. Well done. And enjoy those profits. Keep that account growing, and you'll be, rolling in it like Riz soon enough. Yeah, no, it's really good. No, you're welcome, brother. Well done. Well done. But yeah, I would not chase it here. I would not personally. Now, it could do one of these things. If the market continues to push, we break out of this downtrend on the market, yeah, I could do something like this, over the next few months. And you might be like, Chris, you told me not to chase it, and I should have. There's so much uncertainty in the market, guys. There's so many potential negative catalysts going on right now, and it's a very, very tricky time to trade. Taking your profits early is a surefire way to make sure that you lock it in. Sure, could have Dylan held longer and gotten out at like 245? Yeah, he could have, but it's sure easy for me to say that when I'm looking at the chart now when the candles have already printed. A green trade is a green trade, regardless of how much you made or how much more you could have quote unquote made if you would have stayed in. But again, with all the whipsaw we've had in the market, with the market moving so violently on news catalysts, I think it's really important to make sure that you are locking in green trades or at a minimum setting profit stops to make sure that that thing does not flip red on you. That is the most important thing right now, guys, and that's really kind of what I want to hammer home. So, if you're getting in these shorter term swing trades and they go green, I'm not saying you need to exit immediately, but just make sure that you're protecting your capital, because the worst feeling, and I know this from my time as a day trader, the worst feeling is having a trade that was going really green turn really red really fast. And that is exactly what can happen in this market right now with everything going on around the world. There's so much tension. All it's going to take is a spark, and things can go crazy either way. We saw that spark on Thursday with the CPI numbers that weren't as bad as they expected. You can sense probably the sarcasm in my voice there. It's like, yeah, inflation's going up, but it's not as bad as we thought. That is, to me, it's just ridiculous. But hey, the market liked it. They were happy with it. And so this is what I'm talking about. It's like this euphoria can burn out, especially if we get more news. If earnings aren't as hot as we thought they were, this can definitely peter out and start to roll back over again. It could also run up to the 200 or even our trend line. It is entirely possible that it does that. May reject there, may blow through it. And if we have enough, catalyst and there's enough volume in there, it can definitely happen. I will say we're starting to get a little closer to being overbought here on the, the RSI, but we're sitting, let's see, where did we close at? 61, basically 62. So, a very nice run up here in the market. Be careful, guys. Make sure you are locking in profits when you can. And as I like to say, wave at the, the market as you take those profits to the bank. And so make sure you lock it in, guys. Get your money when you can in this market, and you won't be unhappy that you closed a trade green. So I'm not seeing any other questions coming in. I really appreciate all of our elite members who came out live. Of course, if you are watching on the YouTube channel, you made it this far, make sure that you click that like and subscribe button. And I do know, if I'm not mistaken, Riz is going to be opening up membership again here soon. So if you are wanting to get in on elite membership before the new year to start your new year off right and start making some profits in the market, make sure you tune in next week. I'll have more details on that for you. And until then, we'll see you in the market on Monday. Good night, everybody.